When the value of this is above 0 and extends for a long period of time, then it is a signifier of long-term accumulation. And long-term accumulation is how you'll know whether we are in a true reversal, whether the bear market has reversed or not. What is going on, guys? Welcome back to the Traveling Crypto. Happy Friday to you. I hope you guys have a great start to a weekend wherever you are. Let us get right into it. Market cap sits at 206 bill, about 3 billion more than where we were the last couple of days. Bitcoin dominance 53.5, nothing too novel there. This continues to climb, which is concerning only because it dilutes the value of the cryptocurrencies that are already in the market, and we don't know what the cryptos that are coming into the market are. But that aside, in the top 20 or top 30, Bitcoin Cash was the biggest mover over the last day or so with almost 8.32% in BTC value. There were also a couple of alts that we did send out trade alerts for swing trades and scalps. If you want access to the trade alerts, link is in the description. We'll go over a couple of those after we do our analysis for the day. Neo finally starting to see some daylight after just months and months of a brutal takedown. Actually, this right here is called the all-time high coin index. I think it's, athcoinindex.com. And this basically will rank cryptocurrencies based on a number of fields. One of them is percent from all-time highs. So you can actually sort this by percentage drop from all-time high. And you'll see that Neo is somewhere in the top 10, top 15 right here. So Neo has actually dropped almost 92% from the all-time high. And that is including the little bump that we had recently. So yeah, Neo is one of these. There's actually a few coins that are in the top 15 here. Tron is another one. Cardano is another one. Nem close to a top 15. It's top 17. You'll see Dash here. So, but yeah, Neo is one of those that, I guess that the community had high hopes for. Icon is another one. But it has just taken a beating in 2018. So it's good to see some daylight on some of these coins, but we are far from an altcoin season. If you want my personal opinion, I don't really think we'll have an altcoin season or alt season this year, as some have called it. We might have a cryptocurrency rally as a whole close to December. Nothing close to what we saw last year, in my opinion. But yeah, you might get up to 300 bill, 400 bill market cap, half of what we saw last year during December. And that might be, spurred by the release of the backed platform December. I believe the date is December 12th. Among, the usual holiday fervor that you get with the market. So we might see that, but I don't think, that this is the beginning of an alt season. I could stand corrected, but we are in November. So, we'll see. Looking at BTC, one thing to note here is the price of BTC has normalized between Bitfinex and Coinbase. So here's the price on Coinbase is 63.48. The price on Bitfinex is 64.17. So a little bit of a difference there, not as wide as it was. Tether continues to fluctuate between its dollar peg and a little bit below that. So if you look at it currently, I believe it is 98 cents between Tether and Tether is 98 cents as opposed to $1. So that couple of cents difference, you'll see a small difference in price between Coinbase and an exchange that uses Tether. All right, looking at the 4-hour chart, you'll see that for a period of almost 3 weeks, Bitcoin was trading within this really low volatility range here. And obviously that's not going to last forever. You are going to see either a downside break or an upside break from that really tight range. However, it's still you could still consider Bitcoin trading sideways, and I'll show you on the 1-day chart why that is. And for those of you asking me what this indicator is, this one in the green here, this is the VFI volume flow indicator, and I'll show you actually on the 1-day chart why this is one of the most pertinent indicators to signify whether we are in a true reversal or not. I also use this for swing trading You'll see it on other coins that I have posted, but I do change these values depending on the chart increment that I'm looking at. In this case, we're looking at a 4-hour. So I change these values to my liking. These aren't the default values. If you pull the VFI up in TradingView, you'll see that for yourself. Now, what is the VFI? The VFI stands for Volume Flow Indicator, and it uses the same principles as the on balance volume, except for the results are smoothed out exponentially over a 50-day average. And that is a really reductive summarized version of what the VFI is. You can definitely look up the calculations on your own if you want to nerd out later, but it is an extremely valuable indicator. And I use it, again, as I said, for swing trading while changing these values. So you could see that every instance that the green crossed above the orange and started trending upwards, it coincided with an increase in price. Now, you can't tell what the extent of that swing is, so you're going to have to set, tight stop limits or rolling stop limits in order to protect your profits. But I'll show you on the 1-day chart why the volume flow indicator is going to be the most significant indicator, or one of the most significant indicators in detecting whether we are in a true trend reversal. So looking at the 1-day chart here for Bitcoin, you'll see that this is the range that I was talking about. So it is denoted here by these 2 yellow lines. You'll see it here in these 2 white lines. So if you zoom out, you'll see that, taking a higher level view of Bitcoin, we are still trading heavily sideways between this range. And what I was saying was, you don't need to haphazardly make a trade on Bitcoin at the moment. The range between here and here is only about 9%. It is not that significant. When people talk about Bitcoin, they love to talk about dollar value increases or dollar value decreases. Like, oh, Bitcoin went up $400 today, or Bitcoin lost $500 today. Well, what is that in terms of price? Bitcoin is the most, is the highest priced cryptocurrency we have. So $400 for a security that costs $6,400 is really not that much. So try to focus on percentages. Now, the volume flow indicator, when this thing is above 0, and again, you see here that the values have changed, as I said, based on, whether we're looking at a 4-hour chart or a day chart. You can copy the values that I have, but I'll know that you're taking my strategy, motherfuckers. If I see anybody using the volume flow indicator with the values that I have, I'll know you've been watching these videos or on my Twitter account. Well, it's fine, but obviously, I like to credit traders. If I get an idea from a trader, I'll credit them. Do the same. Just a courtesy, you know what I mean? So when the value of this is above 0 and extends for a long period of time, then it is a signifier of long-term accumulation. And long-term accumulation is how you'll know whether we are in a true reversal, whether the bear market has reversed or not, right? So if you look at the VFI here, we're constantly under 0. Dipping back up at times to touch the 0 line. Here's the 0 line that you'll see here. But we are constantly under 0. And the times that we've gone above it, the times that we've touched it, we've been rejected and came shooting back down. Now, I want you to pay attention to the VFI when Bitcoin had a bull run, actually going all the way back to when Bitcoin came out of the first bear market, or the previous bear market, not the first, but the previous bear market in end of 2015. You'll see here that Bitcoin started, the accumulation started happening on Bitcoin, signified by the VFI, and we went above 0. And we haven't gone below 0. We've touched it a few times and bounced back up, but we haven't significantly gone below 0, going all the way back to late 2015. And here you'll see that this is we're coming up on the end of 2017, the bull run that we saw end of 2017. And we're still above 0 on the VFI, right? And you'll see that we haven't dipped below it until March of this year. And, we are now in a bear market for crypto once again. So the VFI, the long-term accumulation is what you're looking for. Yeah, certainly we're going to see price jumps here and there. We might even break this channel of 6750. We might even get to the 200-day EMA, or get up to this 1.618 on the fib level, which is above $8,100. You might get all that, right? But you want that to sustain. And the only way that you're going to get out of a bear market is with a sustained rally, right? It's not getting out of the bear market doesn't mean, oh, we crossed a certain price level temporarily. No. And one of the most significant and effective ways to highlight whether we are out of the bear market and long-term accumulation is taking place is through the VFI indicator. So open this up in your trading view. You go to indicators, go to VFI, and I think it's by a trader named Lazy Bear. See, credit the trader that you got the ideas from. It's this volume flow indicator, Lazy Bear. It's the one with 5,400 likes. Although after this video, that like count might go up. But yeah, start with the default values. Again, I said for swing trading, I use different values as you see here. And I can go over that in another video. This is not a swing trading video, but yeah. And the minute that this crosses over the zero and we're at the 0 point again, and my view is that we will probably get rejected the same way that we have a few times hitting this 0 point this year. And if we don't look for long-term accumulation, we want to stay above zero as long as possible in order to pull ourselves out of this bear market. All right, moving on to the monthly chart. There's only one thing that I wanted to show here that's quite significant. The stochastic, we are now nearing the oversold level on the stochastic, nowhere near that on the MACD, but we are trending downwards. This yellow line right here is the 7-month moving average. And the last time that we fell below the 7-month moving average, going all the way back to March 2014, when we pulled out of it finally, was June 2015. So that is over a year. I just want to give you guys a realistic sense for how long bear markets can last, right? Because there seems to be this daily question of, oh, are we going to get out of it this year? Is it December? Is it January? Is it, when the ETF hits? Is it when backed platform is released? Bear markets can last a long time. And, we fell below the 7-month average March, and we are now in October. So it's only been 6 months? March, April, May, June, July, August, September, October. Okay, 8 months. But yeah, we've gone below the 7-month moving average for over a year before starting our rally again. So bear markets can last a long time. Just ask the people in the stock market. All right, moving on to just a couple of altcoins that we sent out trade alerts for, and I'll show you why I sent out trade alerts for them. Here is the 4-hour chart. You'll see the VFI again here, but here's the 4-hour chart on BAT. We sent out a successful trade alert on BAT, forming a classic bull flag here. And then obviously the indicators that supported this confluence, you had the rising RSI, the rising MACD, and then the volume flow indicator again, trending upwards. And then obviously the breakout from the bull flag that you see right here. This right here is where we entered the trade at the close of the candle that broke the bull flag. And then, also confirmed by, this is one of the the easiest trades to make because we have so many points of confirmation. You'll see that we're seeing heavy divergence. Let me change the color of this, but we're seeing heavy divergence between the price, between the MACD, between the RSI. You'll see this. And even between the VFI, and yes, you can use divergence on the VFI because it is an oscillator, right? And you're actually looking for divergence in order to improve the strength of your market confirmation. So we had so many indicators here, as well as the bounce off the 0.382 fib level. And if you want any coaching on technical analysis, if you're confused by this stuff and you'd like some one-on-one time with me, that link is also in the description, as well as the link to the trade alerts where we sent out the trade alert for basic attention token for BAT. So that link is also in the description. The trade alerts cost less than a cup of coffee a week. And just another example of the trade alerts that I'll go over for you is TNT, Tyrion. You'll see here that once we actually made, we had a couple of trade alerts on this. One at the breakout of this ascending triangle. This is a classic ascending triangle. You see that the volume is healthy coming out of that. The VFI, again, which I love using for swing trading. You'll see that this was trending upwards, confirming the positive volume of the flow. So we played this breakout, initiated a rolling stop. That way on the retracement, you could take profits. And then once I saw that this was bouncing off of the former resistance, so this is called a resistance support flip or a support resistance flip, right? Where your previous resistance becomes support. So it's bouncing, and here you can, count this as a double bottom if you want. But the main point is that it's bouncing off of the support that used to be resistance, which is a pretty heavy indicator along, if you have other indicators in play, especially volume, it is a pretty heavy indicator that we are going to see a rally from that support level as well. And then you see the VFI come to our rescue once again, right? You'll see that the VFI trending upwards. So we did send out another trade alert at the bounce of this support level. Now, don't expect to make 10x every trade. We're okay, especially in a bear market. You should be okay with 5%. You should be, just ask anybody in the stock market. They would love 5%, right? You should be okay with 5%. You should be okay with 8%. As long as you're protecting profits and accumulating them over time, and even better if you're compounding them over time, the chances of you being a profitable trader over the long term are higher. And that's what you want, being a profitable trader over the long term. I did a video a while back about how if you made 1% a day and compounded it, so say you took $1,000, you made 1% a day, compounded it over 365 days, you'd have $36,000 or somewhere around there by the end of the year. I'll link to that video here. But yeah, it's true. It seems like a mathematical impossibility making 1% a day, but it's true. If you take $1,000, just aim for 1% a day and play with your and trade with your entire capital every single day cumulatively, then you will get to $37,000 by the end of the year. Now, I know that it sounds easier. I'm making it sound easier than it is, but implementing sound strategies will get you closer to that goal. So aim for sound trading strategies. Don't FOMO. Again, if you want help with technical analysis, coaching, or trading coaching, link is in the description. It's done over one-on-one video conference with me. If you want access to the trade alerts, link is in the description. I always forget to say this in the beginning of the video, but please subscribe to the channel. It goes a long way. Hit that thumbs up, leave a comment if you want. And if you have any questions, hit me up on the Discord, which is free. Link is also in the description. Stay safe out there, guys. Peace.